Right now, Wall Street is all about disruptors. Investors want innovation. They want growth. And in this red-hot market, they're searching for the next big opportunity. With the S&P 500 and the Nasdaq hitting new highs, it's a summer of record-breaking momentum. But even as the market soars, there are still hidden gems trading at low prices, stocks with real contracts, powerful catalysts, and the potential for explosive gains. Today, we're diving into 3 low-cost growth stocks that could deliver the kind of returns investors dream about. These are companies with strong momentum, government contracts, and the kind of innovation that Wall Street is craving. Let's break down each one and see why they're catching the attention of smart money, and why there may still be time to get in early. BigBear.ai, ticker symbol BBI. This is an artificial intelligence company that's been making serious waves lately. Earlier this year, BBAI was trading around $3 a share. Fast forward just a few months and it surged past $10, more than tripling in value before settling into a new range. In fact, over the past 60 days, the stock has doubled, and it's not far from its recent high. So what's driving this momentum? For one, BigBear.ai isn't just another AI hype play. The company has landed 2 major government contracts with the Department of Defense and the FAA, worth up to $2.4 billion over 10 years. That's the kind of long-term guaranteed revenue stream that investors love to see, especially in a small-cap stock. BigBear.ai's technology is already being deployed at major airports like JFK and LAX, with biometric scanning and analytics rolling out this year. And here's what makes BBAI especially interesting. It's still flying under the radar. Many big institutional investors can't buy stocks under $10. So if BBAI breaks above that level and holds, it could trigger a wave of new institutional buying. Some investors are calling BigBear.ai a mini Palantir. Remember, Palantir exploded from $17 to over $100 after landing its own government contracts. BBAI could be positioning itself for a similar breakout, especially if it continues to deliver on new contracts and technology rollouts. Next up is Archer Aviation, ticker ACHR. Archer is developing electric air taxis. Think of them as flying Ubers for city commutes. The company's Midnight aircraft is already making headlines, and Archer has been named the official air taxi provider for the 2028 Los Angeles Olympics. That's a huge spotlight, and it means Archer's technology will be front and center on the world stage. So, Archer recently raised $850 million in new funding, with backing from some major players in the UAE. That gives the company a really strong cash position to push through certification and, commercialization. Archer's first commercial air taxis are expected to launch in the UAE in late 2025, where regulations are friendlier and the market is just eager for innovation. The stock itself has been on a tear, up more than 200% in the last 6 months. After a big run, it's been consolidating in a tight range, kind of like a spring coiling before the next move. With high short interest, any good news, like FAA certification or new commercial deals, could trigger a short squeeze and send the stock much higher. Investors looking for the next big thing in transportation are watching Archer closely. The combination of Olympic exposure, regulatory momentum, and fresh capital really make this a compelling growth story. Our third pick is Galaxy Digital, ticker GLXY. Galaxy started out as a leader in cryptocurrency trading and asset management, but now it's pivoting into high-performance AI data centers, a move that really puts it at the intersection of 2 of the hottest trends in tech. Galaxy just secured a massive 15-year deal to lease nearly 400 megawatts of data center capacity to CoreWeave, which is one of the fastest-growing AI cloud providers out there. That contract alone is worth about $4.5 billion in revenue, with service starting in 2026 and expanding through 2027. The company is using proceeds from its legacy mining operations to fund this pivot, and the market is definitely taking notice. Galaxy's stock has doubled in the past 6 months, but it's still trading well below its 2021 highs. With additional expansion options, AI cloud joint ventures, and the possibility of a US listing, Galaxy Digital could have significant upside as institutional investors look for ways to play both crypto and AI infrastructure. What's especially interesting about Galaxy is that it's not tightly correlated to Bitcoin's price swings. Instead, it's becoming a diversified play on the future of digital finance and computing. Now, just a quick word on risk. All three of these stocks are small to mid-cap names, which means, they can be pretty volatile. It's smart to keep any single position to a small percentage of your overall portfolio. Think about 1 to 2%. And maybe consider scaling in gradually, especially if there's a pullback. And hey, if you're comfortable with options, long-dated call spreads can offer upside while helping you cap your risk. Remember, in a market this hot, discipline really matters. Chasing momentum can be super tempting, but honestly, having a plan and sticking to it is what separates speculation from true wealth building. Wall Street is rewarding real contracts, innovation, and credible growth stories. BigBear.ai, Archer Aviation, and Galaxy Digital each offer unique catalysts and strong momentum, but they're still accessible to retail investors before the big money fully moves in. So, if you're looking for the next explosive growth play, these names deserve a spot on your watch list. What do you think? Are you already in any of these stocks, or are you considering a position? Let us know in the comments, and don't forget to like, subscribe, and hit the bell so you never miss our latest stock insights. As always, happy investing!